Hello traders, you are welcome back to the Forex Geek channel. So in this particular video, we are just going to be diving into the best 30-minute breakout strategy that can help you catch high probability market moves with precision. If you've ever struggled with fake breakouts or entering too early, this strategy will give you a solid step-by-step approach to trading strong, confirmed breakouts. Stick around because I'm going to show you exactly how to spot and trade breakout setups with high accuracy. All right, let us just jump into it. Now, you might be wondering why you should use the 30-minute chart. The 30-minute time frame is one of the best for breakout trading because it provides the perfect balance between short-term and long-term trading. Unlike lower time frames that have a lot of market noise, the 30-minute chart helps filter out weak moves while still offering plenty of trading opportunities. One of the biggest advantages is that breakouts on this time frame tend to have stronger momentum compared to smaller time frames. This means we get fewer false breakouts and better trade setups. But to trade breakouts correctly, we need to know how to identify strong breakout zones before they happen. So to find the best breakout setups, we need to follow these steps, right? First of all, we should mark key support and resistance levels from higher time frames. You can use the 1-hour chart or you can use the 4-hour chart to mark your levels. Make sure that you mark key levels on your chart, including trend lines and horizontal levels. Mark the important levels on your chart. Remember that you want to be looking out for rejection zones where price got to and was rejected, horizontal support and resistance levels, and also trend lines that are close to where current price action is. All right. So once you have marked your levels, you look for price consolidation. Remember that strong breakout zones come from major price levels. Okay. If price is stuck in a tight range or forming a flag or wedge pattern, this signals an upcoming breakout. And you can see that we had something similar around here. Can you see what we had happen around here? You can see that we had a symmetrical triangular formation around here, right? You can see that we had a symmetrical triangular formation around here. And then after that, we had a breakout. So it's important that you look for price consolidations. Even after marking your key levels, you look for price consolidations anywhere that it begins to form. Okay? Then you check volume as well. Because a breakout with strong volume is more likely to be real. If the volume is low, the breakout might be weak or even a fake out. So now let's just break down the exact rules for entering and exiting a breakout trade. For your entry, you enter the trade only after a strong candle closes above the resistance for a buy trade, or when a strong candle closes below support for a sell trade, okay, depending on the direction of the breakout. In this case, this particular breakout, it was a bullish breakout. So you can see that price closed above the resistance. This symmetrical triangle pattern that formed here, you can see that price closed above it with significant length. All right. So once you have confirmed your breakout with volume, confirm, you can see there was actually a little increase in volume here and here again. So once you have confirmed your breakout with volume, you can enter your trade, set your stop loss. If you enter, for example, around here, set your stop loss just below the breakout level for buy trades or above the breakout level for sell trades to protect against market pullbacks. All right. The ATR indicator can actually help you decide the best stop placement. All right. Then for your take profit, you can target previous key levels. For example, you can see resistance levels that we have marked from higher time frames. You can use that to exit your buy trade. For example, this would have been a good place to exit our buy trade. But if it's a sell trade, you can target key support levels to exit your sell trade. Okay. Ensure that you use good risk to reward ratios of at least 1:2 to maximize your trade potential. Then to boost accuracy, you can also add other technical indicators. All right. Technical indicators are also important for confirmations. In addition to the volumes indicator, you can also add the 200 EMA. You can add the 200 EMA to the chart. All right. The 200 EMA lets us know the overall trend direction to avoid trading against momentum. In addition to that, you can also add the ATR, because the ATR helps us to also confirm momentum if the momentum is actually strong. Because after the breakout, you can see the ATR was rising, showing that the bullish momentum was actually strong. Remember that the ATR does not show us trend direction, rather it shows us trend strength. So it shows that the strength of this trend was strong. That is the reason why the ATR was rising. Okay. So by using these indicators together, it helps us filter out false breakouts and improves trade accuracy. Now let's just see if we can spot another breakout, preferably a sell breakout. All right. Okay. Remember that you have to mark your key levels and watch out for consolidation patterns. So in this case, we can see that we are having a rising wedge pattern. You can see this is a rising wedge. So we had a breakout to the downside. Can you see the rising wedge pattern was broken? And you can see this bearish candlestick pattern. You can see this rejection candle. See the wick. After the breakout, there was a retest, and you can see how it was rejected around this resistance and this newly formed trend line resistance, because it was a support that turned into a resistance. So there was a notable rejection around here, and there was an increase in volume. Look at this. You can see that there was an increase in volume, and then you can see that the ATR was rising. The ATR was rising. So it shows that the strength was quite, significant. There was a significant strength. All right. And then guess what? You can see that we actually had a brief sell move. It was brief though. It was actually brief, but if you are taking advantage of it, you would have entered and you would have exited at this support. Remember that we have already marked some important zones on the higher time frame. So you would have exited your sell at this support, and then you just wait for another opportunity, because this would have even been quite a risky sell, because the 200 EMA did not confirm it, but the volume and the ATR we are okay with the sell, right? So it would have just been a quick, scalping on the 30 minutes time frame. All right. So this 30-minute breakout strategy is quite an effective strategy for traders looking to catch high probability trade setups. Stick to the rules, backtest it, and refine your skills to master this approach. If you enjoyed this video, hit that like button and subscribe for more expert trading breakdowns, strategies, and live trading setups. Let me know in the comments what strategy you want me to cover next. See you in the next video. Happy trading.